In this video, I'm going to talk through health insurance and health savings accounts, what you should consider when making your election. Let's begin the conversation first with talking about health insurance and comparing the HMO versus PPO plan. So starting off with the HMO, it's your health maintenance organization type health plan, and it requires the use of a primary care physician, a PCP, within the provider's specific network. A PPO, on the other hand, is a preferred provider organization and allows you the flexibility to choose a care provider inside or outside of network. So digging into some more specifics on the HMO, it tends to have lower premiums and out-of-pocket costs compared to a PPO. And this is particularly true because you are required to use the PCP within the provider's network. In addition to this, you have a primary care physician that's actually coordinating the services and specialists. Everything's coordinated through the PCP. As well with the HMO, out-of-network care may not be covered. So this is something to consider if you need care out of network. It may not be covered except in the case of emergencies. Now we can kind of compare that to the PPO plan, which tends to have higher premiums and out-of-pocket costs compared to the HMO plan. Again, this is because you can see care providers outside of the network. They don't have to be specifically inside the network. So you have that flexibility to choose providers outside of network, and hence the costs are higher for these types of plans generally. As well with the PPO, there's no coordination with the PCP or referrals needed with these plans. And then finally, like I mentioned, you can see providers inside or outside of network with the PPO. So when considering going between the HMO or PPO, you'll kind of want to ask yourself, are you okay with the doctor provided within the network in the case of an HMO, or do you want that type of flexibility to see a provider outside of network, and are you willing to pay those higher costs? So thinking about which doctor you want, and again, whether you're okay with seeing someone in network or if you want that flexibility to see someone outside. Now, some considerations with health plans in general is the higher your out-of-pocket costs via the deductible and the out-of-pocket maximum, the lower your premiums and vice versa. So the lower your deductible and the lower your out-of-pocket maximum, the higher your premiums. And this makes sense if you think about it. If the insurance carrier is asking you to pay more out-of-pocket for health insurance costs, then they're going to compensate you with a lower premium, and vice versa. If you don't have to pay a lot of copays and deductibles out of pockets for your health needs, then they're going to charge you a higher premium. Some other considerations is whether to go with the high deductible or low deductible plan. And when thinking about this decision, you'll want to consider the health need of yourself and then the health need of your family. So do you frequently visit the doctor? Do you have dependents where you may need to go to the doctor more often for vaccines or whatnot? So consider your health need. How healthy are you? How healthy is your family? And that can help impact your decision whether to go to a low deductible versus high deductible plan. Again, with the high deductible plan, you're going to be paying more out of pocket. So if you regularly go to the doctor and have reoccurring health expenses, then a low deductible plan may be more prudent. But in contrast, if you're young, healthy, you only see the doctor maybe once a year for that annual physical, then maybe you could afford doing that high deductible plan if you have a cash cushion built up on the side where you could afford that high deductible in the event of emergency, and you want to save some money on those monthly premiums. And then the next consideration as it relates to HMO versus PPO, again, is that doctor preference. Do you have a specific doctor that you want to see that may be outside of network where you need the PPO plan? Are you okay with the provider within the HMO plan? So now that we've talked a little bit about health insurance, let's transition to the health savings account. So with health savings accounts, or HSAs for short, in order to fund them, in order to contribute to the health savings account, you need to be part of a high deductible health plan. And then you also can't have any other type of coverage. You can't be in Medicare, and then you can't be claimed as a dependent on someone else's return. So a high deductible health plan, there's certain limits you need to adhere to, and those are minimum deductibles and max out-of-pocket limits that the IRS publishes each year. So in order to contribute to that HSA, your plan has to be deemed ADHP, a high deductible health plan. As well with the HSA, so the power of the HSA, and it's the best tax vehicle out there, is because it has a triple tax benefit. So money you put into the HSA, money you contribute, lowers your taxes. You get a deduction for contributions to the HSA account. In addition to that, growth on the HSA. So if you decide to invest the health savings account in stocks or bonds and the account grows over time, that's tax deferred. And then finally, as long as you use those HSA withdrawals for qualified medical expenses, then that withdrawal is deemed tax-free as well. So triple tax benefit, contributions come with a tax deduction, tax deferred growth on investments, and then tax-free withdrawals as long as they are used for qualified medical expenses. And then the final thing I'll note about HSAs is they're not for everyone. Going back to the conversation of high deductible versus low deductible, if you are yourself or your family uses health insurance very frequently, then maybe a high deductible health plan with HSA combo may not be the best fit for your situation at this time. Or if you expect to have like a surgery or major procedure and there's going to be a out-of-pocket cost, maybe this is not the year for your HSA. So you can kind of consider it on a year-to-year basis. And then there are maximum limits with the HSA, maximum amount you can contribute to an individual or family plan. So you want to be cautious of that because exceeding the maximum limits could come with penalties. So you want to adhere to those maximum limits. And then finally, as I hinted at, you can invest the HSA and you can allow it to roll over from year to year. So you can think of it as a long-term bucket for your retirement. You don't have to use it up within 1 year. You can let it compound and grow and be rolled over into subsequent years. So hopefully this was helpful recapping health insurance and HSAs, and thank you very much.